Hello, everyone. Happy Wednesday. This is Simon with AvaTrade, and we're about to start our weekly webinar, Interactive Trading Conversations. Welcome, everyone. And I need your help just to make sure that we're technically prepared. If you could type OK into the questions window, if you could hear me, that would help a lot. Thank you. Just type OK into the questions window. Thank you. Testing, testing. To make sure if you could hear me, please type OK and into the questions window. Great, thank you, Ashraf. And also, if you could see the presentation with AvaTrade and the title, type SEEC. I know that we're good to go. Thank you. Okay, guys, if you see the presentation again, just type C, which is SEE. Great, thank you again, Ashraf. Okay, so thank you for your assistance. Again, welcome to our weekly webinar, Interactive Trading Conversations. I see some new faces. Welcome. My name is Simon Friedman. I'm a Senior Account Manager with AvaTrade. A few things about myself. I've been involved in trading since June of 2000, so it's over 24 years now. I started as a prop trader in New York City, and after 11 years of prop trading, I moved into, I like to call it, less stressful environment. So I started to mentor and educate others, and also I'm very happy that today I have a great opportunity to assist our customers at AvaTrade. The agenda of the webinar, very important. Feel free. This is the podium is yours, and this was my idea to give ability to people to ask questions about specific markets. So we do other webinars where we just create presentation and we'll give it to you. Here you come with questions and we'll discuss it together, and we'll try to make sense of whatever markets you like to know more about. So we ask questions, we discuss, we analyze. We'll take a look technically at the charts, and if any fundamentals that I'm aware of, I'll be happy to share with you. Risk warning, you can find the full statement at avatrade.com website. And of course, everything we do here is purely educational. We do not suggest any trades. Social media channels, please feel free to follow us on Telegram, what used to be Twitter as well, which is X now, and as I like to say, my favorite YouTube channel. You have a lot of information there. Please feel free to subscribe. Click on that bell, be notified. If you are watching this on YouTube, feel free to like it. If you do, share with people, they might benefit from it. And definitely feel free to leave your comments or any questions. We'll be happy to hear from you. All right. So now we're going to start again. Just to make sure that you understand it all, we have up to an hour. I hope we have enough questions to fill that hour. Sometimes we run out of questions, which I don't like. I hope you feel the same. So if we run out of the questions, we simply close the webinar. And I prefer that we go all the way to finish an hour. And also, feel free to ask questions. As much as possible. There are a lot of people that will be watching this as a recording on YouTube, and obviously they cannot ask any questions. So your questions and hearing the answers would be beneficial to them. So this is our opportunity to assist the people that will be watching the recordings later. Okay, we're ready for the first question. Again, if you have multiple questions, ask them. We're going to try to answer all the questions. We'll discuss things, and hopefully we'll do something that will be practical and useful for everyone. Okay, let's start. All you have to do, again, the same way you confirm that you can hear me and see the presentation, you just type your question into the questions window. I'll read it and then we'll discuss it. Okay, let's start, guys. Let's go. Rashid is asking, what's the best way to avoid the large amount of swap charges? There are times the trade takes to make profit and swap charges. Okay, it's a great question, but it's not the place for it. If I don't have any other questions in the next minute or so, I'll address it about the swaps. How do you use moving averages? Again, guys, this is not a webinar about technical analysis. We have a nice webinar one of my colleagues is doing where you can find all technical answers. Here, we'll discuss specific markets. Somebody wants to know about gold, what to expect, oil, any currency pairs, any individual stocks that we offer at AvaTrade. So we look at the charts and we discuss it, okay? Now, as far as avoid swaps, there's no large amount of swaps. The swaps are set, you can see it for each individual instrument. And if you're holding it overnight, you're pretty much buying or selling it on borrowed money. So it's going to be a charge, and the longer you're holding it, it's going to be building up, right? You speak with your individual account managers. They'll be able to answer the question deeper. Ashraf, you're asking about moving averages. Again, it's a different place for this question, and this is discussions for a very long time, how to use them and so on. Speak to your account managers again. You have a lot of webinars also that we offer. You can browse through them. Also, the past webinars that we had on YouTube about technical analysis, you might find something useful there. Okay, guys, again, let's just repeat again. We have up to an hour, and we're here to discuss specific markets. Okay, great question, Jeremy. Thank you for saving the day. So Jeremy is asking, can you give your technical view on Amazon, Tesla, and Apple? Great question. And also on some of them, I'm aware of some specifics as far as fundamentals I share with you. Great question. Thank you, Jeremy. So I'll start with Apple, actually. I just read it today. Apple actually reached, as of yesterday, I don't know about today, they're probably higher, $3.5 trillion. It's been running. And let's just bring it up. And the stock is doing amazing. Two main reasons fundamentally. One is, as in June at the conference, they share with the whole world the plans as far as AI. Everybody's excited about it. Also, the new phone is coming in September, the iPhone 16, which will be capable for those new technology of AI. And because of that, also partially, Apple is expecting to increase the sales by 10%. That's the latest thing I read. So Apple is doing great. Also, another thing I just found out, I think, when I was preparing my webinar over the weekend, that they are also working on the second generation of the virtual reality device. It's going to be different shape and different price. So that's an Apple. As far as technical, it's very, I think all three stocks that you asked, they're all at the all-time highs. So it's very simple. There's no resistance there. So if the market chooses to go higher, they're just going to fly higher. And if the market chooses to turn around, which some traders or analysts are expecting some cool down the market, that we might come. If you're already at Apple, if we try to pull back, logically speaking, we would, if we start to slide, we're at what, around 230 trading now? Let's see, 230.76. If we start sliding, we might slide potentially again to around the level of this spike from June 12th, almost a month ago. And as far as resistance, there's nothing that stops it from moving higher as of now. So that's Apple. Tesla is doing great. The funny thing, it looks really, really strong, but as of yesterday, it was actually flat on the year. Take a look. This December 28th. So we are exactly we're actually flat on the year, a little bit higher because the year started here on the January 2nd, technically. So that was around 250. The high was 251. So we technically, as of now, we up $13 in the year. And if you take the end of the last year, 28th of December, we are flat there. So as far as so that's technical. Again, it has a way to go. If we do break above current level, we can fly. If you take a look here, we were here again December last year. Then we were at the same level, around 260, 265. The high of 268.75, October 2023. And then a lot of games were played around the same level. So we're at a very crucial level. Now, just to remember, all this move up was caused by, I think, better than expected deliveries for the second quarter. They reported on, they usually report in the second day after the end of the quarter. So if I'm not mistaken, they were expecting to deliver about 420 cars. They delivered 440,000 cars, something like that. And I think very crucial is the earning report that will happen on 31st of this month, July 31st earnings. By the way, Apple is reporting the very next day, August 1st, Apple is reporting. So we discussed Apple previously. Okay, so that's your Tesla. We're at the crucial level from which we actually start selling. We went from current level around 265 all the way to 138 according to this chart. Okay, so that's Tesla. And Amazon, let's take a quick look at Amazon. I think Amazon is close to the highs or at the all-time. Yeah, we're also at all-time highs, right? Most of the big boys, I call them, the high-value stocks. So here we go. Again, similar to Apple, nothing stops it from going higher. Daily chart right here. But take a look. Market's been making highs the past, today's the third day, and Amazon's having a hard time going higher. So I would be really cautious here. If the rest of them are flying, Amazon is not. If the market decides to cool down and go lower, this guy would be the first one to go. Similar to Microsoft, I shared, you didn't ask the question, I just want to give you an illustration. So this was Monday the 8th, the market was going higher and Microsoft went lower. So I shared with my team that something is not well here. And next day we might see the pullback. The Microsoft, exactly what happened. The sell-off happened. It was also, you could see in the chart something's wrong. If you talk about the relative strength, the whole market is running, and Microsoft, one of the leaders, didn't. But here was a fundamental reason on Microsoft. They actually resigned from being the observer of the AI panel. There's a reason. You can read a few articles there. So I think the moment they kind of tried to disconnect from AI, OpenAI, actually, they were the biggest investor there initially, $10 billion. Now they don't want to do it, at least officially, they don't want to deal with it. So the stock went down. So, okay. So again, Amazon, going back, it is experiencing a little bit of weakness here. It looks like it could be running out of steam also. As you could see, the volume is falling as well. So we might see a pullback. Great questions. Thank you, Jeremy. I hope it was helpful. Okay, Rashid is asking, what's your views on crude and Brent oil in the coming 2 days? Wow, very specific question. Actually, we just had numbers of the storage of the crude oil, and it came better than expected, and market reacted to it. Let's see if we could see it in a shorter time frame. Okay, oil is very tricky. Everybody knows that unfortunately there's a war going on in the Middle East. So if it was 20 years ago, oil would be, I don't know, at $150, maybe $200. Now, because the Middle East is not the only producer of oil, it didn't react as strong as expected. So the war is continuing, unfortunately. Also, China is not doing that great, so it's kind of equalizing that thing maybe. And as you could see here, we came to 84. We failed to go higher, similar to this situation here, and then we sold. So far, we're selling or we're sitting on the 100-day moving average here. I'm not going to go into Brent because probably it's the similar picture there. Just different oil, same thing pretty much. So the inventories try to push it higher, but you can see the spikes up and down. But we are in green today, but doesn't look so strong. So one thing that could save oil currently, or one of the things that could save oil, if China try to recover here, and they are trying. So this Chinese index, we're building up some support around here. If we see a nice move to the upside, we might see the oil reacting to it as well, because China is one of the biggest user of it. Okay, so great question. Thank you. That's oil. NVIDIA. Okay, Rashid is asking, guys. First of all, I appreciate that you loading up with questions. Very good. I like the energy flow. So NVIDIA, as you know, NVIDIA, one of the stocks I think do the best this year, and it's all about AI. They're providing the hardware for AI right here. This is the weekly chart. Beginning of the year was at $48. Again, this is the post split, right? So recently we split at 10 for 1. So whatever the price now, it was 10 times higher. So here, adjusted to the split, we went from 48 to 136. That's roughly 200%, maybe around that time, around that number. So the same thing with the highs. We made this high here, right, on the 20th of June, that we pull back and we confirmed the previous support. So at least we know the 117 is a support, at least for now, strong one, because we bounce right off it, right? And then, by the way, here the number here is 118. That day I was watching the pre-market; it was as low as 115, and now with the 3 days advance move with the gap and continuation, it could be that some short traders are closing the trade. It looks to me like a short squeeze. If you could see this gaps, 3 consecutive gaps and continuation. So as far as the upside, unlike the others like Apple and Amazon, here we actually have a specific number that could be an immediate resistance, right? The high here was 140.61, and we hit that level on the 20th of June, and we sold from there. So it looks like that level around 140 is being rejected by traders, by sellers. So let's see. If market continues to be strong, we might see Nvidia moving higher and retesting this 140 level. And what happens if we move lower and break this previous support around 117, 118? We might actually invite some short sellers again, as that would indicate the lower high and then the lower low, so maybe the change of trend. But fundamentally, everybody's excited about it. Some skeptical analysts are saying that it's time for some correction, but it's always, you have opposite opinions, okay? So that's as far as NVIDIA. Let's see. Next question. Where do you see the price of gold taking into account Powell interest rate speculations? Great question. By the way, Powell was speaking now for 2 days, I think, testifying in front of Congress. I didn't have a chance. I usually like to hear speeches, press conferences. I couldn't find anything about this 2 speeches. But pretty much, you're right. It's all about the Feds, pretty much. So by the way, I think after the latest NFP numbers, the probability of the rate cut in September grew from around 50% to around 70+%. So data, very important, by the way, in that direction. If you are following economic calendar, tomorrow the CPI data could really shake the market one way or another. So we had NFPs, then it was adjusted to better numbers, so more favorable for the Fed cuts. Then we had unemployment ticked by 0.1%. So next segment is the inflation. So if tomorrow the numbers are showing continuous slowing of the inflation, that would really add more excitement to towards the Fed's cutting the rate. So that would push potentially, again, we never know how the market will take it, but potentially that would move the dollar lower, and it could possibly move gold higher. Let me take a look at the MT4. I have some levels here. Here we go. So gold was playing around this level, 2,333. As you could see here, resistance, support, resistance, resistance. Then we broke through it. And by the way, if you're trading gold, you could use the 10-year yields as another indication of what might be happening with gold. Okay? Because when the 10-year yields going, it's all connected to inflation, of course, in the interest rate. So when the 10-year yields going higher, the gold has some downside pressure, and the yields are selling, then the gold is gaining some strength. Okay, so another indication. Now, as of here, it's very simple. We still have that 2,330 kind of level of support, and the immediate resistance, this recent high that we had, 2392, almost 93. So 2393, we can draw the line around here. So if you look left, interesting. It's very important to see this. You see, we stopped right here, and if you look left, there was a lot of resistance here as well back in April, right? History sometimes repeats itself. So as of now, I guess the 2390 slash 2400 would be possible resistance. And as far as support, take a look. Also, we're sitting above the 50-day moving average since last week, and we're holding steady in those levels. So let's see. Again, CPI tomorrow will definitely affect the equity markets, will affect gold, will affect the dollar. So be prepared for that. Okay. Jeremy's writing. Gold. The latest Powell news didn't seem to have a huge effect on gold. Does 2392 look good for this week? Funny, Jeremy just mentioned the number I just said. Yes, 2392. It's the resistance. Could there be a pullback, profit-taking, consolidation, anything? I think the indication or trigger might happen tomorrow with the CPI numbers. And if the inflation is high, that would be really disappointing. That would kind of remove a little bit excitement from everyone as far as the Fed's rushing into cutting the rates, because the three aspects the Feds are looking into: the state of economy, the employment, and the inflation. Out of three, inflation is the most important one, because that's the main purpose, to bring inflation to 2%. So if tomorrow's report is disappointing, it's higher than expected inflation, we could see a move down in the markets, probably gold as well, and dollar would be going higher, as potentially the cut would be pushed for the later date, possibly December. That was the initial or latest thing before we just had NFPs. Okay, great question. Ashraf is asking, do you feel the AI stocks had a hard run with NVIDIA price flat? What you take of a Planter, AMD? Again, you can take any stock, especially AI is the hottest item. And it just reminds me, I went through a lot of cycles in the market. And as I mentioned to you, I came in June of 2000 to trade. And at that time, at our prop firm in New York, we were only trading NASDAQ stocks. So there was a saying, short everything with 4 letters, because I think at that time, all the tickers of the NASDAQ stocks had only 4 letters. Now it's a different thing. Maybe now also most of them. I'm not sure what the rules are. So why? Because there was a lot of excitement. If you had the company, I don't know, Joe Smith, and then you you were able to add .com to it, and then the valuation of the company, which was fake, went from I don't know $1 million to 100 million. Nothing changed the company, but because you're on the web now, that means, so of course we all know how it ended. Everything burst, and that market was just crashing, right? And then we had other things. I don't know. A few years ago, there was a big boom of the cannabis, right? The stocks went to, I don't know, hundreds and thousands of dollars, and then it just went down like never happened before, right? So I'm not saying AI is going to crash. They say it's the future and everything else, but it's all psychology. If you take something that everybody gets excited, and with some time the excitement cools down. I don't mean to sound pessimistic, but definitely when this gold rush cools down, there might be some sell-off in any of them, including the AMD. We already saw the Palantir had the sell-off, and then it came up again, and so did AMD and other stocks. So let's see what happens. First, we need the condition. In general, if the market continues higher, they probably push these stocks higher as well. But some analysts are predicting the S&Ps at the end of the year will be at 5,600. We're currently at that level. So what does it mean? We're going to be flat towards the end of the year. From now, we in July, right? Almost mid-July. So we have half a year in front of us, right? So it's hard to say. It's a lot of things. What Feds are going to be doing, what numbers are coming out. We just started the earnings. By the way, very important. Friday, the banks are kicking in. I think Citibank, Wells Fargo, and another bank, don't remember. Three major banks are reporting on Friday. They're starting the earnings season reporting. And like I mentioned, we have Tesla. We have a lot of all the major stocks, all the stocks actually reporting this either this month or next month for the second quarter. So a lot of ingredients in this salad. I guess we'll see how it tastes at the end. Okay. Rashid, you asked about the gold. I just mentioned gold, so I'll skip that one. Do you know where can we get the real time? I really don't know. You need to Google it, search it. I'm sure it's available somewhere. I don't know where and how. I personally, I use it. I have an American broker, so I've been using it for the past 15 years, and they provide it. So I don't know if anybody can, but I'm sure there are a lot of sources, maybe not a lot, but there are sources that you can get it either for free or maybe pay a little fee. I'm not sure. But just important, if you find or when you find it, just see the correlation between 10-year yields and gold. It's very important. Okay, we're doing great, guys. We're about 30 minutes into the webinar. We had some great questions. I hope that will continue, and I'm ready for next question. I think I went through all of them. Let me just double check. We went through oil and media, gold, Ethereum technical. Jeremy is asking. Jeremy, thank you. Asking a lot of questions. I appreciate it. Ethereum. In general, the cryptos has been doing not so great. I'm not so strong about cryptos, so I wouldn't be sharing with you anything fundamental. But technically speaking, if we take Bitcoin as a major one, we sustained this support around here. When was it? May 1st of this year. Let's see, Ethereum, we've had similar idea. Exactly the same thing. So if we take Ethereum, technically speaking, we had a few moments where we are kind of established a strong support here. That was back in February. That you see all these spikes, somehow mysteriously, quote unquote, they didn't break through. They just had spikes around this level. So around 2,800, 2,900 roughly. Let's see the latest touch. Like this would be the low of 2,860 right here, right? And that was back May 15th, almost 2 months ago. Since then, we flew higher. I think a lot of it to do with the ETS and everything else. Then we didn't reach the high on Ethereum of March. We tried a few times, and then we came right back. Another spikes to downside, all those tails, and the buyers coming in. So you could, again, nothing's 100%, but you could establish an idea that around 28.60, it's a strong support. So far, we haven't been able to break it from February of this year until today. Now, 200 moving average, the red line right here, we are trading currently below. And if we do close above it and start building some price action, we might be moving higher here. Also important, when you see a candle like this, huge candle, you can also try to draw the lines, the top and the bottom, because some reason a huge candle like that started here and finished there. And take a look, we just draw this line, right? And you look left, take a look what happened back in April. Same exact level, right? Plus minus. So here we go. We are above this line around 3,000. What was the low here? 3,046, right? From here, we made a huge move. This was 1 day move. That was May 20th, whatever happened that day. If we start building support here, we might actually try to move higher from here. Because every time, again, I'm repeating myself, from February until today, every time we reach this level, we had to move to the upside, right? But we would need also to be above the 200 moving average somehow as well. So support, at least for now, around 28.60, and a strong resistance at this point would be the top of this candle here, which was 3,046. The high of 36.89. So that's about $640, $650. All right. Again, fundamental, I can't add anything to it. The move up was with ETFs. There are other things, and let's see what happens. If you trade any of the cryptos, I think the traders looking at Bitcoin as a leader just to see what the major move is or the major conditions are. Okay. All right. Let's see. Can you talk about natural gas? Great question. Thank you. We'll talk about natural gas. Give me just 1 second. I think my questions jumped. Okay. Natural gas. Natural gas is it's really funny. It's been going through a lot of struggle. Take a look. There was a nice move up together with oil when the war with Ukraine happened and the whole world started panicking. Then we start this huge sell-off right here. 2022 November, we went straight down. This is the weekly chart, right? 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months straight. Then we tried to find the base here, went lower. We were sitting roughly about above the 257 line right here. Then it looked like, okay, we collected enough. The buyers would push it higher. They did. And disappointment came in again. We did close below. Then again, second try here and the sell-off for 5 consecutive weeks here, starting this year, January, all the way down. Then starting the week of February 18, we tried to recover. We built a base above the previous low, and we had a nice run actually. We started, like if you take this bottom as a start, 153 to, I think we hit $3 briefly here, 315. We hit on June 9th, a month ago, and then we went down again. So we are below the 253 magical level. We're having I think this is a 5th consecutive red week. We are below the moving averages, the weekly moving average. Now let's take a look on the daily chart. Daily chart looks very, very interesting here. Take a look. It's a long string of losses, pretty much every day, starting June 25th. And take a look. We're struggling around 200 moving average here. Okay, now, I want to show you something that caught my eye a while ago. I shared with my team, and also shared this at some of my webinars. Interestingly enough, I just realized this, and I brought it up, and it's kind of a trigger my curiosity. Take a look. The move higher here started in March. This is monthly chart on natural gas, right? March 2016, a move started. Then we went to 4 plus. They came back to pretty much around the same level. And then around March, we triggered the buying again for March, April, right? April. So 4 years later, exactly 4 years later, we triggered and continued to a super crazy move that ended up at $10 on August of 2022. And take a look, we went down much faster than we were going higher. And guess what? 4 years later, so 2016, 2020, and 2024, March, April of current year, we triggered another buying, which was strong. So I mentioned to my group here, and actually worked very nice until the last 2 months we really traced. So let's see what happens. We might see similar story to here, similar story to here. We might move higher, or the opposite could happen. We might move lower and kind of trying to confirm the support at some levels. Very hard to say, because the truth is, all the fundamentals with natural gas change. With the war of Russia-Ukraine, Europe is not the same anymore. They rerouted the natural gas. The U.S. started to trade a lot of gas to Europe. It's a liquid gas, or whatever you call it. Things are changing, so I'm not sure if anybody knows what's next for natural gas. Another thing I just read today, actually, with the elections and election in Europe, the current governments that were elected or about to get elected or put in place, they're actually very positive towards the natural energy. And some analysts are predicting that oil and natural gas will have a hard time going forward. I just read it today in some articles. So we don't really know. So again, if the past 2 months, let's go back to daily chart. I just show you the big picture just to see how amazing things, if you really try to see some logic behind it, right? Like we said, every 4 years there was a move up. It could be totally subjective there, but it did happen. So something in it. So again, back to our daily chart, back to today, we are struggling with the 200 moving average here. Let's see if this pullback is just profit taking, or maybe we might continue lower and find some support at the lower levels. If we do move lower, logically somewhere here would be the next support. First, of course, this is psychological level of 2. Usually the even numbers are where the traders have the orders, which also makes sense. We had the resistance here, we had the move, a lot of fights around this level, and then we moved higher. So if we do move lower, maybe around $2, we could see some kind of support. And if we turn around, we might try to continue this move, which could be potentially big move. Now, it's also very interesting, if a trader looks at it, again, it's also very, very subjective. You can find what you want to do. If you want to see the head and shoulder here, you might actually see the head and shoulder. This is the head, left shoulder, right shoulder. So if we do come back to around neck level, we actually could have an intense move to the upside. So any scenario is possible. Again, sometimes technicals are working, sometimes you have fundamentals take over. So if this fear of natural energy like wind power and nuclear power and other things will really continue growing strongly, and people will move away from the traditional energy, we might actually see a lack of demand for oil and natural gas both. Okay. Jeremy asking about US 30 Dow Jones. I tell you up front, Dow Jones is really, really behind NASDAQ and S&Ps. And I think the past few weeks I tried to find the reason. You know, it's only 30 stocks in this index. In S&P's 500, you have 500 stocks, and in NASDAQ you have 100, mostly tech stocks. Here you have 30 stocks. It's the original, the oldest index, right? So I tried to find out what was really pushing the Dow Jones lower, and there were actually recently two stocks that were pushing the index down. It's United Health, is a big company, and I think CRM, which is Salesforce, I think, if I'm not mistaken. But definitely, I remember the United Health. It's been not doing so great, and it pushed Dow Jones. But as of now, technically, it's a good question. It has a hard time breaking this level. Take a look. We did try, came back, and every tail almost hitting the same level, the current level where we are now exactly. Where are we trading now? 39,800. Okay, so for Dow to go and catch up with the running NASDAQ or S&Ps, take a look at these guys. They're just unstoppable. Wow. This is real time, right? So Dow is really having a hard time breaking it. So it needs some push up, some push to break through these levels. Let's see if it happens. For some reason, it doesn't, and that's also something to pay attention to, because if at some point NASDAQ and S&Ps decide to turn around, we could see actually Dow Jones selling more, but it's also not sure. Maybe during those, sometimes it goes the opposite. Especially, I realized at the opening of the New York Stock Exchange, you could see NASDAQ and S&Ps running and Dow is selling. Sometimes the opposite scenario happens. So, you know, it's lagging definitely. Is it going to break through this 39,800 or not? I guess we'll find out. It's definitely a little bit far from all-time highs. Okay. All right, guys, we're doing good. Very exciting. Jeremy is asking again. USD CAD is near 136.2. Signal says short below resistance at 136.3. Support is 36. The sell signal was about 2 hours ago, and TP 36. I mean, I guess if you have take profits and stop losses around 30 pips, you're talking about the short-term signals. Let's take a look at USD CAD. This is the daily chart. You see I have my level here, 137, around 137.40. Strong resistance here, right? We are below the 50, 100, and above the 200 moving averages, right? We could try to see where could be the support. We're actually sitting somewhere around support. Try again with the levels that I put. It's not in stone. You know, I'm just trying to see what makes sense. Here we had resistance, and then we had support. So around this level, around 136.12, the current level where we are, it could be support. But again, going back to tomorrow's CPI data, we might see if the inflation shows weakness or further weakness, we might see this support breaking and dollar falling, US dollar falling lower, right? So I guess we'll find out. So we actually at the bottom of this channel. This has been going for at least 2 months, right? Here we go. Beginning of May until today. So almost 2.5 months we've been really, really channeling. What does it mean? If you go to weekly chart, it's going to be more obvious, right? Take a look at the weekly chart. A lot of accumulation. Which way? Take a look. 1 week we moved higher, and then it took 5 weeks to erase the gain, right? But we're still there. So if you take weekly chart, this level has been going on since April. The moment we got above this 136, we've been channeling for a very long time, right? So definitely we're preparing for a move, because the longer we stay in the tight channel, the stronger could be the move. But which way? Nobody can tell you. Also, it depends what oil is doing as well. If oil price start going higher, it would add a little bit positivity to Canadian dollars. There's a correlation there. So that would put another pressure to USD CAD. And like I said, if we have CPI that would increase the probability of Feds cutting the rates, it's another reason for US dollar to possibly move lower as well. That's the answer. I hope it works. Okay. OZCHF. Ashraf is asking. Here we go. Let's see, where's OZCHF? Here we go. To remember fundamentally that Swiss Bank is the only bank that actually cut rates so far in the current cycle. They did it twice, I believe. So Swiss franc had some weakness. If you take Aussie CHF, it had a nice run here from mid-June, been going nicely. And the previous sell-off started from around here. So 160.76. We're not, okay. So that's the sell-off. So if we continue, it actually looks nice, but a nice move, a small correction, and continuation. So if we see some positive things for Australian dollar, by the way, if China is getting better, Australian dollar will feel it as well. So if that index going higher, we might see continuation here. And let's take a look. The weekly chart. Yeah, it looks good. It looks that it is possible for continuation, but again, anything could happen. We could have a crash of China market, and it would pull Aussie and New Zealand with it as well. But as of now, it's really aiming for that resistance here, right? And that was back at the end of May. We are above all the moving averages. We had a nice run, small pullback, profit taking, and continuation. Let's see what happens there. And JPY pairs, beautiful. I think it's my favorite for the past few months. The Bank of Japan is very stubborn. For 17 years, they held the same interest rate. And only, what was it, a month ago or so, they finally moved from a negative interest rate of 0.1 to 0. The yen is at the historical highs. Now it's even higher, but I think as of last week, it was on the level of 1986 against the US dollar. So it's super, super weak, which on one side is helping the Japanese industry because they produce and sell a lot of goods. I mean, people love Japanese cars, electronics, whatever else they sell. And it's being produced in Japan. The salary is being paid in yen, and when they sell it abroad, the profit margin is higher. But to produce those cars and other things, they have to buy the commodities, and commodities they pay in dollars, so it costs them more to buy, less to produce, more to buy. So I don't know what the balance is, and they did try a few times. Interventions, as they call it. The bank would inject a lot of capital to it, but it didn't work so far. So some are speculating that they will do something as far as doing another increase to stabilize the yen. Again, those are just speculations. I think a lot of traders are hoping for it because this move has been going for quite a while. I mean, this last leg started from around 140. That was the end of last year, going higher with some pullbacks. And if you take a monthly chart, this big move started from 2021 with a strong correction here and smaller correction here. So it's been going since January 2021. We're talking about 3.5 years now, right? So we are at the historical levels, and all of the pairs, you take any pair, CHF, JPY, it's also been super, super strong. Also, the Aussie and New Zealand dollar did great against Japanese yen. Here we go. Both of them. Actually, wow, New Zealand dollar is selling today. Pound today is running in general, so it's very strong today. And against Japanese yen, it just, in the past 24 hours or less, it made, talking about 120 pips. So Japanese yen remains weak. All the currencies, some more, some less, but super, super strong against the yen. And I think the only thing can save Japanese yen here is some actions of Bank of Japan. As of now, they haven't done anything. A few interventions here and there, but it didn't really have a strong effect. Didn't happen. As a matter of fact, every time they made an intervention, you see some of them with the spikes, the yen just continued lower after that. It was a really temporary, sometimes few minutes success, and then the yen just continued weakening. Okay. All right, last question, guys. Euro Aussie. And we're going to wrap it up. Here we go. Like I said, Aussie has been super, super strong, and it's also strong against Euro here. We are at the bottom of the move, and the good thing that these tails are not really breaking the key level of, I would say, psychological 160. We did try, and we are holding the current level. So what we can do is to draw the line of this recent support, which relates with this first attempt to go lower. The low was 160.26. The latest attempt to reach 160 was at 160.25. So this is our support for now, around 160.25. Euro, of course, has its own game, and it's all about central banks starting to tighten, not to tighten, but the opposite to easing, which means to cut the interest rates. And like I said, so far, not to count the Bank of Japan because they haven't really, they just went to zero level. But Swiss Bank, which is Swiss National Bank, I think, they did it twice. The rest of central banks, they haven't done it yet, I believe. And I think we should see, or we will see some actions by banks, and it would be the opposite. We'll be seeing the opposite effect. If you remember the currency wars, when they were actually tightening the rates one after another, there was a big competition. Now, it would be interesting. Of course, the major ones is the dollar, euro, and pound. So they haven't done it yet. And let's say, hypothetically, if the US starts cutting the rates, the European Central Bank would probably follow, and the Bank of England as well. And if one of those three will start, the rest will follow. So it's going to be very interesting to observe. Okay, guys, thank you very much. You've been an amazing crowd. I appreciate your participation. Thank you all. Again, please don't forget about the social media channels. Subscribe, click on the bell, get the information. If you're on YouTube, share, click the likes if you like it, don't fake it. And please write your comments, your questions, very, very important. Thank you all. Don't forget about CPI numbers tomorrow. And let me think. Next week, I'm taking a week off, so I won't be able to do this webinar next week. But please, we'll be happy to see you the following week on Wednesday evening. Take care. All the best. Take care. Bye-bye.